What's up, you guys? Welcome back to the Average Joe Investor channel. My name is Joe, and it's the beginning of November 2021, which means it's time to talk about the top yielding, the best dividend stocks to buy here in November. Specifically, in this video, we're gonna lay out all of the top yielding dividend stocks that have been raising their dividend for at least 5 consecutive years, and then we're gonna drill down to the important data we need to understand, the important metrics we need to understand to make sure we are picking quality and safe dividend stocks. We're going to talk about dividend yield. We're going to talk about the dividend growth rate. We're going to talk about dividend safety through the dividend payout ratio. And of course, we're going to look at how many years these companies have been paying dividends to understand what are the best dividend stocks right now here in November 2021 to add potentially to our dividend stock portfolio. You guys know I value you being here and I never want to waste your time. So without further delay, let's get started. Joe here. If you're new to the channel, make sure to hit that subscribe button below the video to make sure you don't miss any of my future videos. And if you do click that subscribe button, make sure to leave me a comment below saying you subscribed, and I promise to personally respond to your comment. Alright guys, let's go ahead and dive right into it here. You know, we could just look at, it's not that hard to find, really, a list of the top yielding dividend stocks. In fact, you can find dividend stocks yielding 15, 20, 30% if you really want to find them. That doesn't mean that they are a good fit for our portfolio. And if we are crafting, and that's what the term I'd like to use here, for crafting a dividend stock portfolio, for being very intentional with the dividend stocks we add, if we're trying to look for good cash flow that is safe, then it's important we add balance to our portfolio and we are mindful of more than just the dividend yield. We also need to be mindful of the dividend growth rate. We've talked recently about how that dividend growth rate is so critical for the portfolio to eventually blow up your dividend income in the future. We also need to be aware of dividend safety. So let's go ahead and identify the key metrics that we look at when we're adding dividend stocks to the portfolio. For full awareness, we are going to utilize my monthly dividend stock spreadsheet that I make available to my Patreon community. And you can also find this source information on the internet. You can find it on websites like Seeking Alpha. You can find it for yourself manually through Morningstar. But if you'd like to have the data already brought together for you so that you can make important decisions yourself, well then you gotta look at the dividend stock spreadsheet through my Patreon community. If you're interested in getting more dividend content, including this spreadsheet and all spreadsheets I use, and potentially if you want to have access to my portfolio and know when I make changes to my own portfolio, because I like to walk the walk as much as possible rather than just make and spew content here on YouTube. I actually have my own portfolio and I share all of my specific decisions when I make them in the Patreon community for the $10 a month tier. But you can get access to the spreadsheet starting as low as $5 a month. If you're interested, check out the link in the description below. Let's dive in. Okay, first element we're gonna look at here is the dividend streak. And we're looking in the spreadsheet at only companies that have been raising their dividend for 5 consecutive years. So if the dividend has been paid the same amount every single year, it's not gonna be on this list. I think that there is value and security in finding companies that can actually pay a dividend consistently and increase it every year. It speaks to the longevity and the staying power of the company. You might even call it a wide moat business, one that has security from competition. Dividend streak here. So we've got companies in this list that have been paying dividends as long as 67 years, 66 years, 65 years. Companies like American States Water, Dover Corporation, Northwest Natural Holding Company. And we've got companies that have been paying dividends for as low as 5 years here. It doesn't mean that this is the only metric we can look at. It might mean that a company with only 5 years of dividend payments of increases is a better fit than the 67 years. It depends on what we're trying to craft and balance into our portfolio. So dividend streak here, something we are definitely aware of. And in the spreadsheet, we will break the tiers in from challengers, contenders, and champions. A challenger is 5 consecutive years up to 9 years. A dividend contender is 10 years to 24 years. And a dividend champion is 25 years and higher. All right, let's move over here to dividend yield. Dividend yield is certainly a critical player in this conversation. It's just not the only thing. We also want to have a dividend growth rate. So, but looking at the dividend yield here in the spreadsheet, we've got dividend yield and the average 5-year dividend yield. So this gives you a more historical look in how long, what has the dividend yield been like historically over the past 5 years as opposed to what is it right now. It gives you an idea of where it might come back to in the future, whether it's higher now or lower lower right now. As you can see right here, we've got dividend yields as high as 9.65, 9.62, 8.8%, and we've got dividend yields as low as 0.14%. So it depends on what we're trying to accomplish here. Okay, let's talk about dividend growth right here. We know that this is one of the key elements to our review. In here, we've got the 1-year dividend growth rate, the 3-year dividend growth rate, the 5-year dividend growth rate, and the 10-year dividend growth rate. If you'd like to get this data yourself, you can capture it from Seeking Alpha. They do a great job of delivering this information on their website. But if you want to have it all together here with all the dividend stocks on one list, then you can certainly do it this way as well. So we've got this 1-year, 3-year, 5-year, and 10-year. If it doesn't have 10 years of dividend consecutive payments yet, then it's going to show as not applicable. One thing to be aware of, the 1-year dividend growth rate might not be as critical here because of COVID. We know that companies were certainly disrupted by COVID, and I think that it speaks to the staying power of a company if they went right through COVID, continuing to pay their dividend and increase it. We're giving a little bit of leeway here, at least I am. It's up to you if you'd like to do the same thing. Giving a little bit of leeway here with respect to the 1-year dividend growth rate, knowing that it might have been an adjustment for the company and that they still raised their dividend, but maybe they didn't raise it at the same level that they historically have done. So we're going to give a little bit of leeway there. We're going to look mostly at the 3, 5, and 10-year dividend growth rates. You can see here we've got some crazy high dividend growth rates. If we sort by dividend growth rate by the 3-year growth rate, we can see that we've got as high as 62.44% on the 3-year growth rate. We can sort as high as the 5-year growth rate and see what the highest 5-year growth rates are, as high as 67.14%. So we've also got really low dividend growth rates too, so we have to be mindful of this and make sure that we are consistent or increasing with this growth rate if possible. If we've got 23, then 9, then 3, well, that's not a really good trend, is it? And also, we want to have a dividend growth rate. Personally, my opinion here, I think it's important and critical to have a dividend growth rate that exceeds the historical inflation rate, meaning that the cost of goods sold here in America is not increasing faster than our dividend is. Why is this important? Because that ensures that our dividend is continuing to be worth more over time, as opposed to keeping up with just what things cost. It helps us blow up our dividend income relative to the cost of goods over time. So if we really want to identify companies that have a dividend growth rate, both short-term and long-term, exceeding 3 or 4%, it's up to you. I mean, you can go for lower than that if you've got a high yield, and I certainly do have certain companies that have high dividend yields and slightly lower dividend growth rates, or they are stagnant, because I'm looking at a holistic portfolio view as opposed to just an individual stock review. So I have some companies that have higher dividend growth rates and some that have higher dividend yields, and the portfolio comes together very well. So the goal here with the dividend growth rate is to exceed at least 3 to 4%. For me, in this spreadsheet, I've got anything 4% and higher is in green, anything between, I believe, 2 and 4% is yellow, and below 2% would be red. Okay, dividend payout ratio right here. Again, when it comes to payout ratio, I do it a little bit differently here. I think that cash flow is a better metric than net income. The standard payout ratio is dividends paid divided by net income. I think it's a better view to look at the actual cash coming into and out of the business, the free cash flow, which is the amount of cash that is available after paying all expenses and factoring in certain capital expenditures into the business, and not factoring in things like depreciation and amortization that are not real cash expenses. So free cash flow, best metric in my opinion. So we're going to look at the dividend payout ratio, dividends paid divided by free cash flow in this spreadsheet. Now in this spreadsheet here, this is something you can manually calculate on Morningstar if you want to, or potentially on other websites like Seeking Alpha. I haven't really dug too deep on that. But we've got the payout ratio based on the trailing 12 months here, based on free cash flow. And then we've also got historically over here to the right, we've got the free cash flow per share trailing 12 months, 2020, 2019, 2018, 2017, to see the trend here. Is this payout ratio based on just one really good year of cash flow, or is it based on a trend here that is good? The goal here with the payout ratio is to have a dividend payout ratio less than 75%, unless it's a real estate investment trust, master limited partnership, or business development company, in which case payout ratios are safer up to 100% because tax law requires them to pay out at least 90% of their taxable income. So if it's a regular dividend stock, for me, the rule is less than 75%, though I'd like to have it around 50% or less, because that also allows for room in the dividend to grow in the future and confirms safety right now. All right, now that we've got all the metrics here, let's go ahead and come over here. We can actually start filtering by some of these things to only look at the top dividend stocks. So we'll go ahead and sort by dividend yield. Let's come over here. We're going to go ahead and we'll keep the 1-year growth rate here, but we're not going to look at that or filter by it. We will filter by green or exceeding 4% for the 3, 5, and 10-year growth rates. We'll do the same thing for the 5-year dividend growth rate, and we'll leave the 10-year dividend growth rate alone right here. And we'll also come over here and we will sort by the payout ratio. We will get rid of anything that is red. We'll keep the yellow just for awareness. All right, so we've got only green and yellow here, and we've got our trends on the free cash flow. Let's come back over here. So let's take a look at the top dividend stocks here, factoring in these elements, sorting by dividend yield, and we've got top results here. We've got plenty of companies here that are great options for us. We've got MPLX LP, based on our metrics, of course, Delek Logistics Partners, Altria Group, Westlake Chemical, Northwest Bank Shares, Chevron Corporation, Gaming and Leisure Properties, Hennessy Advisors, Star Group. The list goes on and on here. We've got some great options here. Remember, we're not factoring in the 1-year dividend growth right here. We're looking at 3, 5, and 10-year dividend growth rates because of COVID, right? And knowing that there might have been some significant adjustments in the past 1 year due to COVID. We can see here we've got companies like MPLX and Delek Logistics here yielding over 9.62% and 8.8%. And historically, their dividend yield has been right around those same numbers. So it's a pretty consistent dividend yield. And the payout ratio, given, these are master limited partnerships, MPLX, Delek Logistics, they still have payout ratios based on free cash flow less than 75% here. We've got Altria Group here at 82%, though they have historically been at that rate as well. And just for full awareness, guys, I own some of these companies in my own portfolio. I own Altria Group, I own Westlake Chemical, Northwest Bank Shares, I also own Star Group, I own AbbVie right here, and I've got some others down here a little bit lower as well, including Gilead Sciences right here. I'm not saying that any one dividend stock on this list, guys, is perfect for your portfolio. It depends on your overall portfolio view. You can also see my portfolio historically for the past month as what it is right now here on November 1st. What the portfolio looks like right here to see my weighting in each one of these dividend stocks, how many shares I own, and what the overall weighting in the portfolio is, and the overall weighting for the dividend growth rate as well. You can see that my overall yield right now is 5.05% in the portfolio. You can see that my 1-year weighted dividend growth rate is 8.9%. I've got 11.2% on the 3-year and 11.8% on the 5-year. Dividend growth rate. Some of these companies don't have dividend growth rates, including my covered call ETFs right here. Others have lower yields, but they have higher dividend growth rates, like 17.86% here, or 11.9, 17.9 over here, 16.1, 22.6 on the 3-year dividend growth rate. Might not have as high of dividend yield though. And if you want to get a look at just the master limited partnerships and the real estate investment trust, you can come over to these tabs right here and look at those companies by themselves. Just having all of these metrics, guys, does not mean that this dividend stock is a perfect fit for your portfolio. Like I mentioned earlier, you still need to do a little bit more due diligence. You want to know, you want to understand really, how does this company make money? How does this company work? How would this company potentially handle a downturn in the economy? In the next video, guys, we're going to talk about these two companies right here, MPLX and Delek Logistics. We're going to talk through and understand what is going on with these businesses. Most importantly here, this dividend yield at 8.8% and 9.62%, are these sustainable dividend yields? Is this a company that is safe and insulated from a dividend cut? We want to understand, since they're in the energy sector, we want to understand, what are these companies? How are they structured? Are they a good fit for your portfolio? Are they likely to continue maintaining or raising their dividend in the future? So that's what's on deck for the very next video. Again, if you're interested in the Patreon community, guys, check out the link in the description below. You can get started for as low as $5 a month. Ton of content, ton of valuable information that can get you jump started or help you just drill down your perfect dividend stock portfolio. Make sure to leave your 2 cents in the comments below, guys. Let me know, give me feedback on this video. What did you like? What didn't you like? What would you like to see more of in the future? I'm always open to your guys' feedback, and I want to get information on what content you guys want to see in the future as well. So make sure to leave those 2 cents in the comments below. That's all I got for you guys in this video. Have a great rest of your day, and please continue to stay healthy, both physically and financially. Have a good one.